Welcome back. You're still watching Business Morning on Channels Television, and we're broadcasting live from Lagos, Nigeria. Well, we'll continue a review of some sectors of the economy, but this time around we're actually reviewing the economy. The macro economy is in focus on today's edition of the program. That is the GDP, unemployment, inflation, and other matters that actually relate to the economy. And I'm being joined on the program by the Managing Director and Chief Executive Officer of Financial Derivatives Company Limited, Bismarck Rewane, and we're going to be having this conversation for the next couple of minutes. You can also be part of this conversation. Well, good morning, Bismarck, and thank you so much for joining us this morning.
Good morning. Happy New Year.
Thank you so much. Let's just start with a general overview. Most market watchers have described 2013 as a year of unfulfilled expectations. Do you share this view? What are your thoughts as to how the economy actually fared last year?
Well, it depends on from what perspective you're looking at it. If you're looking at it from the citizen's perspective, from the individual, from the consumer's perspective, then Nigeria has not performed optimally. So suboptimal performance does not mean bad performance. It only means that you're performing well below your potential, and that is the reality. So there are two ways. A consumer either comes out happier or miserable. The reality is that in 2013, inflation came down from 12 all the way to 7.9%. However, unemployment went all the way up. Urban unemployment went all the way up to about 31%. So when you add unemployment to inflation, even though inflation came down, the rate of increase in unemployment was much more than the rate at which inflation reduced. So the misery index, that is how miserable Nigerians are, went up from 35 to 39.
Okay, now you actually, you know, your company, Analyst, your company actually did an economic scorecard, so to speak, and described 2013 as a year of two halves. How could you expatiate on this?
In the first half, we had first quarter 6.1 growth, and second quarter about 6.2% growth. But in the third quarter, we went all the way to 6.81. So the first half of the year, performance was pretty low compared to the 5-year average. The 5-year average of Nigerian growth has been 7%. So when you come in at about 6.1, we say that is low compared to the 5-year average. But in the second half, and I think in the fourth quarter, when the figures come out, we are going to be seeing ourselves at about 6.9%. What you produce, what you earn, what you consume, and what you invest are the four pillars by which we evaluate a country's performance.
Now, what were those institutions that you would say actually drove the economy last year?
Well, the economy was driven primarily by three institutions. One, the central bank, which maintained a contractionary policy, which introduced a cashless policy and expanded it around the country to 6 states, which intervened in the currency market to preserve the currency and also manage aggressively the foreign exchange reserves. The second institution that actually maintained stability and sanity was the Security and Exchange Commission. The Security and Exchange Commission had zero tolerance for infractions, licensed some alternative trading platforms, also increased the capital requirements of capital market operators, and ensured that there was transparency and efficiency within the stock market. Therefore, the Nigerian Stock Exchange was able to excel in that particular environment, and foreign investors were able to come into the market, which was good. But most important of all of these institutions was the stabilizing institution. The stabilizing institution is AMCON. AMCON was able to intervene. Yesterday they redeemed 1 trillion in direct bonds and swapped 700 billion. And the rest is being cleaned out in the balance sheet. Now, they also detoxified the risk asset portfolio of banks and also intervened in recapitalizing 3 banks. Right, and so you had policy-making institutions, you had regulatory institutions that actually regulated the environment, and you had the stabilizing institutions that stabilized the economy.
Okay, so now let's look at least 2 of these institutions that actually drove the economy in 2013. Let's start with the CBN. We know that in its effort to sanitize the foreign exchange market, the CBN suspended the wholesale Dutch auction system and replaced it with the retail Dutch auction system. But did it actually save the situation it was trying to?
Well, it's what we call palliatives. My view about the exchange rate is that sooner or later you have to come to the real equilibrium exchange rate, what you call fair value. whether we like it or not, this currency is going to come under pressure in 2014, in which case you have to make some adjustments. When and how you're going to make those adjustments will depend on what happens in the early part or the second part of 2014. In 2013, you have what we call the known unknowns. That is, we know that this is an unknown. But in 2014, you're going to have unknown unknowns, in the words of Donald Rumsfeld. When the unknown unknowns are more than the known unknowns, then it calls for caution, right? And it could lead to some erosion of confidence. So as we go into 2014, we have to realize that the unknown unknowns, if you student of mathematics, in quadratic equations, when you have multiple unknowns, you have to resort to a different type of formulae to actually arrive at your answers.
Well, we know that, okay, I'm going to ask that, what is, in your own opinion, fair value for the Naira?
It's a dynamic scenario. What is fair value for the Naira today is not fair value tomorrow. So currencies gyrate, and there's what you call currency volatility, and then you can hedge against it. But the difference between the parallel market rate and the official rate tells you how disequilibrated the currency is. As of yesterday, the parallel market was trading at 176 naira to $1, while the official market was at 155.7. So there was a 20 naira differential. The question is that human beings are rational economic agents. Why would anybody go and buy dollars at 176 if it's available at 155? Somebody is making a rational decision. Therefore, over time, currencies move towards what you call their true value. And so after the adjustment of the currency, which is inevitable, you'll find that the parallel market will actually converge, will come down, while the official market will depreciate. That's what's going to happen in 2014.
Okay, so we'll come back to looking at these institutions, but let's look at that economic scorecard we actually have right now on our screen. In terms of production, Nigeria's GDP is said to be $283 billion, with real GDP at 6.4%, while on the Global GDP rank, Nigeria is 37 out of 192 nations. What does this mean for us?
Well, what it means is your plan, well, let's say your vision, is that by the year 2020, you are going to be one of the top 20 economies in the world. In other words, your GDP will be $900 billion. Now, what you see is that in 2014, you are number 37. You are going to have to overtake 17 countries in a matter of 7 years, which is, to me, is not going to happen. It's not possible. Secondly, if you look at those numbers, your GDP growth rate is 6.4, while your labor productivity is 3.9. It means that you are growing in spite of your productivity. That means you are a natural world economy. You are just taking oil from the ground and selling it, right? What you need to do is to move towards productivity, where people actually produce rather than just sit down and share oil money, right? But also, you must understand that in 2013, at least 300,000 to 400,000 barrels of oil was being stolen every day. So stolen oil is not part of the productivity. So the country has to come to terms with the fact that stolen oil is inimical, and then you have to do something about oil leakages, and not to talk of suboptimal investment. I think that's important.
Now, still looking at that scorecard, in terms of consumption, the Gini coefficient is at 48.8. Shows a level of inequality is actually very high. But let's quickly listen to this, this soundbite by the minister, the coordinating minister of the economy, Dr. Ngozi Okonjo-Iweala, who spoke about this recently when she met with the private sector in Lagos. So let's listen to her, and then we'll come back and continue this conversation.
Okay. Yeah.